Welcome to This Week in Money. I'm Jim Goddard. Today, Chartworks CEO Ross Clark will have a rundown on the major markets over the past week. The founder of Casey Research, Doug Casey, gives us his view on the trade war between the U.S. and China. He believes national boundaries are breaking down with so many areas demanding independence. And is uranium the go-to energy source of the future? Author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash, Hilliard MacBeth, talks about how Canada shapes up against the U.S. tax cuts. He also compares the U.S. cash-strapped pension system against Canada's national pension plan and how real estate is doing with the new stress tests. Plus, at the end of the show, we'll have company showcase updates from American Manganese CEO Larry Reaugh and Vatic Ventures Executive Director Nasim Tyab. We'll talk to Ross Clark right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of northwestern BC. Check us out at blindcreekresources.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's the CEO of Chartworks.ca. Welcome back to the show, Ross.
Nice to be with you, Jim.
How did the Canadian markets do compared to the U.S. markets over the past week?
Well, finally we're getting a little bit of life over in Canada, and it's been a while since we've really seen too much here, but luckily we've seen the energy markets really come to life and be helpful. And overall, the consolidations that we've been seeing since the January top in most of these markets, whether it's on the U.S. side or the European and in Canada now, we're finally getting to a decent consolidation. The volatility is starting to drop down, and we've seen good tests of important support levels pretty much across the board. The February low after the highs, since then in the U.S. you've been seeing marginally higher lows as far as the Dow and S&P are concerned. The Russell 2000, the small caps, have been doing very nicely out of this bottom here. And we've had short-term good buy signals from oversold readings, but they've been, 2 to 5 day rallies into overbought and then back down again. So for longer term investors, it's frustrating. For the short term traders, they've got to be pretty nimble in here right now. And as we've finished off the second half of the week, we've come off a good buy signal on Wednesday on the work that we do, and we'll see if this one's got the life to move up into May, because May and July are typically the 2 months of the year where you're going to see a seasonal high. So in a strong year, you would see your seasonal high in May, small correction, and then a higher high into July. If we're going through more of a topping process here, this attempt to move up into May, if it can't gain some traction, then we've been thinking that the deeper correction, and this I think can still happen at some point this year, is going to be down to the 20 or 50-month moving averages for these indices. So for the Dow, that's going to be just around 22,000 for the 20-month, and at about 20,000, just a shade under right now, if it's coming down to the 50-month. I still think that this is a dominant uptrend, even if you have corrections to those levels. So we'll see how they perform right now.
Copper had a surprising drop during the past week. What was behind it, or do we know?
I don't really know what the principal action was on that. We did see base metals across the board see some weakness at the tail end, and some of the big miners like a Freeport-McMoran really took it on the nose. The earnings and numbers are poor. You take a look even at Caterpillar, which is really a good measurement of the strength of the industrial side of the economies and what's going on as far as infrastructure is concerned. They came out with just fabulous earnings in the middle of the week. However, their forward guidance is such that they're saying that this looks as though it was probably the best of the year. So Caterpillar had a big outside reversal. So maybe what we're seeing here is, rationale for markets to be heavy, and in particular over in the industrial side. When we look at what's been going on the last couple of months, you've got this consolidation in most, other than, say, the Russell 2000, the small cap, which has been working its way towards its old high. But you got the utilities index bottomed out about a week after the hard break in February, and it's been doing nothing but just walking itself steadily up. And that's the same type of action that we saw back in 2000. When we had the dot-com mania through 99 in the first 3 or 4 months of 2000, and nobody wanted to own a dividend-paying stock. There was no reason for it because growth was the place to be. And by the middle of March in 2000, it was like they turned the tap, and they turned it off as far as those growth stocks were concerned, and they turned it on for the utilities. And the utilities managed to do very, very well for the next 2 to 3 months, which is like we're seeing right now, had a pause and then rallied into the latter part of the summer. And we're seeing the same type of action here, where that money has been moving from the hottest area over to more conservative ones that have shown value. So at this point, I think the XLU and the XLE, the energy stocks, are right now the places to be. And you want to be wary of what the industrials look like.
What's the Canadian dollar up to?
Canadian did well into the middle of the week and then started to come under some pressure, a little bounce back on Friday. But the problem here has been that from a political perspective, you're not getting really good guidance from the federal government regarding the pipeline issue in BC and Alberta, and BC is digging its heels in, coming out with a move towards the BC Supreme Court to try and get a ruling in their favor. If this thing drags on, it's a big negative, not just for these two provinces, but for Canada in general and the way it's viewed. So with the oil market doing very, very well, up in the $68, $69 range, and Canada now having some trouble, I think you probably see some pressure on the downside.
Ross, thank you so much for being on the show.
Good to be with you, Jim.
My guest has been Chartworks CEO Ross Clark. Coming up, Doug Casey, next on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Bill McWilliam, President of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYD-VF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Doug Casey, founder and chairman of Casey Research, which you can find online at caseyresearch.com. He's speaking to us from Uruguay. Doug, welcome back to This Week in Money.
Thanks, Jim. It's a pleasure to be back here from a distance, anyway.
Right. What took you to Uruguay?
A backward little socialist country, but it's quiet and pleasant and peaceful, despite its many failings.
And has it given you any advantage to be in a different place to take a look at the world and see what's going on from instead of being a U.S.-centric kind of place?
Well, that's very important, to not be too U.S.-centric or, for that matter, Canadian-centric. If you are, you put yourself in the position of a medieval serf who's afraid to leave his village, or the modern-day equivalent of a village, which is a country, or maybe worse, you put yourself in the position of a vegetable rooted to one place. I don't think that's a good survival strategy, and it's not nearly as much fun either.
How do people treat you there? Do they think it's unusual that you've moved there, or do they just accept, hey, it's the way the world is now?
Well, that is the way the world is, frankly, because I'm not a migrant. I'm completely legal on everything. But you've got to remember that all over the world there are hundreds of thousands of migrants that are just coming and settling in places. So, people, this is one of the great times of flux in human history.
The Dow has pulled back from its recent highs. A lot of people are calling for a stock market crash. What do you see ahead for the Dow?
I'm of the opinion that the stock market in general is overpriced. So I really don't want any part of it. That's not to say that it can't go up 10 or 20 or 50% more than it is now. There's no predicting these things. It's just that by historical levels, it's very overpriced. Price-earnings ratio, price-to-book value ratio, price-to-dividend ratio, and I think the economy is skating on thin ice. So, no, I don't want to own the stock market in general.
What effect are trade wars and the threat of trade wars likely to have on the markets and our economy?
Cannot possibly have a good effect. Can only have a bad effect. One example of this is just this week, or a few days ago anyway, when Trump did something and the Chinese retaliated with 100% plus duty on sorghum. There was something like 20 large ships shipping sorghum to China that had to turn around. Now, it's fungible. That sorghum can be sold someplace, but it's very expensive and inconvenient for all parties that are involved, including the Chinese recipients of that sorghum, which were expecting it and need it. So multiply that times 100 different commodities. It's a disaster. It's really stupid. And the Chinese are just as stupid about this as the Americans are. So I hope they both back down. But there's no telling what they'll do.
Well, Trump was quoted as saying trade wars are easy to win and are good. Do you think he has any idea?
No, I think he knows absolutely nothing about economics. He's he's proven very good as a real estate speculator using lots of debt, but he knows nothing about economics, and the people that are surrounding him are no better. So he's flying by the seat of his pants. And I say that as somebody that's very glad that Trump is in office, as opposed to the alternative, which would have been Hillary. But I don't see how this is going to end well.
Does the Trump administration prefer a weak U.S. dollar?
Of course he does, because Trump believes in debt, and a weak dollar is good for people that are in debt. And the U.S. government is head over heels, and everybody's in debt. The only problem is that weak U.S. dollar is somebody else's major asset, including the middle class, who hold most of their assets in dollars, assuming they have any assets. So you destroy the currency. If that's a good idea, if a weak currency is a good idea, then Zimbabwe and Venezuela would be the most prosperous countries in the world, but they're not. So what you want is a strong, stable currency, not a weak currency. Another mistake Trump is making.
At this point, are you more bullish on gold or silver?
Silver is more volatile. It's a much smaller market. It's very depressed relative to gold. I've got to favor silver as a speculation at this particular point.
Are the junior gold and silver stocks on deck for a big run?
They are. They're about the only cheap area of the stock market that I can think of. You've got to remember that commodities peaked the last time in 2011. That was a long time ago. Commodities have been going down since then, but they've apparently bottomed, and they're actually heading up. So that this is one of the most under-owned and most despised areas of the market. And in the past, it's these crappy little junior mining stocks have shown the potential to move up 10 times, 20 times in value as a group. I think they're about to do it again. We'll see. But I'm long.
Is China's backing of the petro-yuan with gold good for gold?
It's very good for gold. And it's very good for the Chinese. And what it means is that, especially with their One Belt, One Road project, you're going to have dozens of countries around the world that start using the yuan instead of the dollar. Nobody wants to use the dollar. They know it's a hot potato. It's just the one that everybody accepts at the moment. So, especially if the yuan is backed with gold, people are going to go in that direction. And I think they will back it with gold, officially, at some point, because, they want to make sure people trust it and use it. And that's how that's done.
Do the gold and silver markets usually run just before the end of a stock market bull?
Well, I'm not sure I'd say that, but I'll say that, the gold and silver markets run when it looks like there's a crisis in the air. And there's lots of crises in the air. So, I'm bullish on both of them.
Are other countries likely to sell off U.S. treasuries, and what could that mean for gold, silver, and the U.S. dollar?
Well, look, the U.S. is running $1 trillion deficit this year. And as the economy goes back into hard times, it's going to be a $2 trillion deficit or more. So, yeah, they're going to try to get out of dollars, especially at low interest rates, because the next problem is likely to be really serious inflation. So I don't want to hold treasuries at this point. Neither does anybody else.
Is the Canadian dollar likely to benefit from higher gold and silver prices?
Well, if anything, the Canadian government's even more irresponsible than the U.S. government. It's likely to benefit to some degree from those things, though, because Canada is a resource country more than anything else. But I don't have any particular confidence in the Canadian dollar.
Is that because of the massive federal government debt?
That's one reason. And the people that were elected in Ottawa, Trudeau and so forth, and these people are a disaster. If there's anything stupid they can do, they'll try to find it and do it. So a currency is like a country's stock. Currency goes up, it's an indication that the country's being well run. If a country is being badly run, the currency tends to go down.
Are banks constricting lending, and what effect is that likely to have on the economies of Canada and the U.S.?
Well, with the fractional reserve system, it's a very, very shaky platform where you put $1 in the bank, and a bank is able to lend several times that dollar out there. Very risky. I don't know what the current policy that banks are doing right now, maybe. But, the banking system as a whole in both the U.S. and Canada is very shaky.
Is that because they have so few reserves on hand?
Yeah, they've got lots of loans, and at the top of what passes for a boom, a debt-driven boom, a lot of those loans are dangerous. So the loans go bust, the banks have to eat it. So I really don't want to own bank stocks either.
What does a debt deflation look like?
Well, stock market crashes, let's say, and somebody that had a company that was worth $1 billion, that people were counting on the billion that the company's stock was worth, if it crashes, all that money dies and goes to money heaven. company defaults on its bonds. That's another billion or however many dollars that just disappears. So that's what a deflation looks like. And it's still possible. Although governments all over the world are inflating their currencies, trying to head off that eventuality. They're much more afraid of deflation than they are inflation. I think they're going to get inflation in spades, though.
What do you think our societies will look like, considering that wages have been flat and, in fact, have gone down since the 70s? Could we really deal with a massive increase in inflation?
Well, the problem is that the standard of living has been flat to going down. If it wasn't for tremendous increases in technology, the standard of living would have gone down severely. But it's not like it was in the 50s and the 60s when everybody's real standard of living was going up every year. Sure, everybody's got a flat screen from China these days. But when you're talking about the average car costing $40,000 and the average car has to be financed over 6 or 7 years to the average buyer, that's very risky, and it's not a sign of a raising standard of living.
We'll have more with Doug Casey next on This Week in Money.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange, symbol PBX. For more information, please visit us at powerbandsolutions.com.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. I'm speaking with Doug Casey, founder of Casey Research. He's speaking to us from Uruguay. Doug, is the globalist dream of a one-world government falling apart?
Yes, I think it is. The European Union is going to come apart at the seams, and even many of the individual countries in Europe are likely to break up into smaller countries. This thing with Spain and Catalonia is one recent example. Last year it was the area around Venice and Italy. But this is true in many places in Europe. So the trend in the world is not towards bigger political entities. It's towards many smaller ones. There's a lot of little countries in the world that are going to become even smaller and break up. A lot of third world countries. Most of the countries in Africa are not real countries. They're going to break up into different countries. In South America, Brazil is likely as not to break up into 2 or 3 countries. Bolivia, same thing. So this is true all over the world. In fact, I'll make a bet. I won't be around to collect it in all probability. But 100 years from now, the U.S. and Canada, neither one of them will exist in their present form. So, yeah, forget globalism. Thank God it's a dead duck.
Is nationalism the antidote for globalism, or is it just the natural result when people don't like it?
Yeah, I'm not for nationalism. It's the other side of a false coin. It's choose arsenic or choose strychnine. Neither one of them are desirable things. I'm for individualism as opposed to either nationalism or globalism.
Do you see the world kind of settling into a bunch of city-states like the way it used to be in the Middle Ages?
Quite likely, actually. And I don't even think in political terms, quite frankly. I think that because of easy travel and easy communication, which we now have, people are going to align themselves in what I call philes, P-H-Y-L-E-S, which is to say groups of people that get together because they have common interests, whatever those interests might be. They could be anything. It could be their philosophy, it could be their religion, it could be their occupation, it could be any number of things. So I think the idea of politics and the nation state itself is on its way out.
In the U.S., instead of left versus right, is it people versus a deep state? And is President Trump on the side of the people?
Well, he's more on the side of the people than anybody I can imagine in recent times. So that's the good news. It's kind of a gut feeling thing on his part. I don't think Trump has any coherent philosophy on that subject, but he recognizes that the people that live in the swamp and commute from Washington to New York back and forth, these are the deep state people that profit from things the way they are. It's an informal kind of thing. People just share the same interests. And Trump knows they hate him, and he hates them. So it's a good thing. He's whether he wants to be or not, he's an enemy of the deep state. So I support Trump from that point of view.
If you were Trump's financial advisor, what would you tell him?
This is a real problem because he's sitting on a time bomb. While he's in office, and I think he's going to be a one-term president, he should try to radically deregulate and radically fire lots and lots of the bureaucrats filling cubicles in Washington. That's one thing he should do. Radically cut government spending. But, you could do anything serious in Washington. It could upset the whole financial apple cart, which is just very, very precariously balanced at this point. So, real problem. I'd rather see things blow up under the leadership of a left-winger than they and their policies might get blamed for it. But if Trump followed my advice and deregulated, everything might fall apart. We'd go back into the Greater Depression, and it's a big problem.
Does it look like interest rates are going to continue to head higher and the bond market lower?
That's what I think. Interest rates have been going down since the early 80s when, as you'll recall, the U.S. government was paying 16% on its paper. I think it's going back up to those levels. I don't know how long it's going to take, but it's headed there as the dollar weakens. So I wouldn't touch a bond with a 10-foot pole, except as a wild short-term speculation.
If interest rates continue to rise, at what point would the debt bubbles burst?
Well, listen, it should have happened some time ago. It hasn't happened yet. But the longer that they put it off and the bigger the bubble gets, the more of a mess it's going to make when it happens. So what you should do is pretend it's going to happen tomorrow morning and act accordingly.
And if that was the case, what would you do in that particular situation?
Well, the best thing is to neither a borrower nor a lender be. That's the safest way to play it. That and own a lot of gold, especially physical gold coins in your own possession.
You're not a big fan of certificate gold?
There's such a thing as counterparty risk. Can you really trust the person that's holding your gold? Maybe, probably. But there's not certainty about these things with a lot of these companies. That's the problem.
Do you think cryptocurrencies are returning to a bull market or just experiencing a dead cat bounce?
Good question, and very hard to answer. I'm all for cryptocurrencies, and they've treated me very well. And the answer to the question is, yeah, I think the bull market in them is likely to resume. I don't know how high it's going to go, but I'm long some cryptos right now. But I'm like a cat on a hot tin roof with them. So,
do you see cryptos one day replacing fiat currencies, and every country's going to have their own crypto?
Well, yeah, all these governments are going to come out with their own cryptos because they want to get rid of cash. They want to get rid of paper cash. But those won't be any more trustworthy than the current currency units. So if you're going to use cryptos, you don't want to use a government crypto. You want to use a private crypto that you know what the algorithms are and so forth, how many can be created. That's the answer, not a government crypto. And a lot of these governments are going to come out with their own cryptos.
Are marijuana stocks resuming their bull market?
I believe they are. I think that marijuana is going to become very, very big business all over the world, but starting out here in North America. So they had a big run-up. They got hit. And I think if you want to be in the stock market, marijuana stocks are one of the few places to be.
Is the electric vehicle market likely to continue to grow at even a faster pace?
I think it will, actually, because they're making huge advances in the technology, number one. And number two, electric cars have many fewer moving parts. They handle much better. They have very low centers of gravity. They should be much cheaper to run than gas cars in the future. Everything is going in their favor. Everything. So, yeah, they're going to take over the market from gasoline cars in the future. I have little doubt of that.
One of the things, too, you'll notice with an electric car is how quiet they are.
That's another big plus, quite frankly.
Do you think government should subsidize them to get more people to use them right now, or will people just naturally go to it as gasoline prices continue to go up, especially in places like Vancouver?
No, the government shouldn't subsidize anything. Certainly not electric cars. Subsidies are just a scam for transferring wealth from the middle class, the population in general, to the people that are making something. So it's making the rich richer. No, the government shouldn't do anything like that. The market will handle it.
Do you or would you drive an electric vehicle?
I don't drive one now, but I would. I don't want to drive one now because at this particular point, they're still a little bit too inconvenient for me. But, you know, I don't like to drive anyway. It's not like it was in the old days. There's not a lot of empty highways anymore, and police are everywhere, which is rather paradoxical at a time when a lot of sports cars are turning out 600 and 700 horsepower. So, yeah, I'll be happy to get an electric vehicle at some point in the future. But I don't like to be an early adopter of new technologies like that. Prices on them are going to come down a lot. They're going to keep improving.
Since Trump became president, major changes have happened in Saudi Arabia, North Korea, Syria, now Armenia. Is Iran likely to be the next country to undergo major change?
Well, the whole world is changing, and it's a surprise, but a pleasant surprise that North Korea seems like it's becoming reasonable, and Trump should be congratulated for reaching out to North Korea and talking to them, something that no previous U.S. government's even thought of. I don't know what's going to happen in Saudi Arabia. That's another time bomb that could go off, especially with their war against Yemen or certain portions of the Yemeni population. And, you know, Iran is another time bomb. I hope that Trump doesn't launch some type of attack against them. But, you know, I mean, the U.S. has got soldiers all over the world, primarily in Syria right now, on the Russian border. So it's a dangerous situation. So Trump is doing some good things and some bad things. I hope the bad things don't blow up in all of our faces.
Through these geopolitical changes, oil has been relatively stable. What do you see ahead for crude?
I'm neutral on crude, because if there's a blow up in the Middle East, crude is going to go way, way up. And there may well be a serious blow up in the Middle East. But over the long run, oil, which is mainly used for transportation, is going to be phased out. We're leaving the age of fossil fuels, and technology is going to make things like solar much more affordable and easier to use. So, answer to the question is, I'm neutral right now on oil.
Is the uranium market coming to life?
The future should be in uranium as well. It's by far the safest and the cheapest form of mass power generation. The problem is government has screwed that up, as they screw almost everything up. If we had free markets in nuclear, you'd have small, very safe, very clean nuclear plants, very cheap. Could be everywhere locally. We're using second and maybe third generation technology. We should already be at fifth generation technology. But the answer to the question is, yeah, I'm still very bullish on nuclear. And uranium is one of the best metals to get into right now.
A December 21st executive order from President Trump targeting human trafficking and corruption included a clause for asset forfeiture. Could that alone make America great again?
No, it's going to do just exactly the opposite. The more power that the government has to steal people's assets based on accusations or whatever, the government should get out of this, and prostitution should be totally legalized. So, entirely apart from that, the legislature usually makes very stupid laws, most laws they make. But Trump doing everything by executive order, he's flying by the seat of his pants on so many of these things. And since he has no core philosophy, he's going to make a lot of mistakes. So, no, they shouldn't do that.
How's your latest novel doing, and where can people get it?
Well, the latest novel is Assassin, but Speculator, which is about the mining business and a bush war in Africa and so forth, where our hero Charles Knight makes a lot of money, and Drug Lord, where he becomes a drug lord. Those are both available. So people can go to highgroundbooks.com, or they can go to Amazon, where they're readily available, both Speculator and Drug Lord. Assassin will be out in 6 months.
Doug, how can people find out more about KC Research?
Well, they can go to internationalman.com, or they can go to kcresearch.com. We have lots of really excellent free blogs that they can subscribe to, and some of our publications are very low cost and quite excellent, I believe.
Doug, thank you so much for chatting with us.
Well, the pleasure was mine, and we'll do this again in the near future, I trust.
My guest has been Doug Casey, chairman and founder of CaseyResearch.com. He was speaking to us from Uruguay. Coming up, Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. Next on This Week in Money.
Vatic Ventures Corp is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
MacBeth Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, MacBeth's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at MacBethresources.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Nice to talk to you as always.
The U.S. tax cuts, what kind of an effect are they having on the North American economy? And if they boost the U.S. economy, is that good for Canada?
Well, it's unclear. So the immediate impact is that, of course, there's less government revenue because they've cut the taxes on corporations and some of the high income earners, and the projections are quite dire for the government revenue. Now there is an economic theory which has been tossed around since the 1980s and represented by the Laffer curve, which says that eventually the tax cuts will lead to more government revenue because the economy will grow faster, and therefore, but the last time it was tried in the 80s by Ronald Reagan, it didn't work, and so we'll see this time. But the borrowing requirement they're talking is pretty large. They're talking about starting next year at over 4%, almost 5% of GDP, and it doesn't drop below 4% until 2023. So that's a huge amount of borrowing every year. Because not only did they cut taxes, but they put through a huge increase in defense spending, one of the largest, maybe the largest increase ever, possibly only second to when Reagan was in power. So it's now whether that'll so in the short term that could be a boost to the economy because there's more money going back into the economy and the government's not keeping as much money for the government. But if interest rates rise, and they have started to rise, then it'll eventually mean that the higher debt levels the cost of financing that debt will start to overwhelm the government spending, and they'll have to cut back on something else, which, of course, is negative for the economy. So it's I guess you could say for the U.S. it's possibly a short-term boost and a long-term negative.
Does Canada have to go through a round of tax cuts to stay competitive with the U.S.?
Well, interestingly, this is not, your listeners may not agree with this or know this, but it actually over the last 10 years, the tax rate on corporations, which is where the biggest impact it was on corporations in the U.S., the tax rate on corporations had been cut many, many times in a row by the previous government, and in Canada, and Canada had one of the lowest tax rates in the world, in the developed world. So the U.S. cuts are actually, their rate was very high at 35%. Our rate was quite low compared to other countries at around 20%. I'm sort of averaging it out. So now that the U.S. has cut their taxes, they're kind of catching up to Canada. So if Canada wanted to stay lower than the U.S., Canada would have to cut further. But I don't think the actual tax rate is going to be that big a factor for people deciding to invest in Canada. I think there's other factors like NAFTA and that would be bigger. So it's going to be a struggle between what they call entitlement programs, which are things in the U.S. like Social Security and Medicare and Medicaid, and the smaller government revenues and the bigger borrowing requirement. And it's sort of like a replay almost of what's happened maybe 2 or 3 decades ago. That could get very, very volatile, I guess would be the word. I was going to say interesting, but it's I think maybe volatile is a better word.
Well, take a look at Nicaragua, where the government's been forced to cut pension payments. They're having deadly riots.
Well, it's interesting you mentioned pensions, because that's one of the first. So the way the Social Security works in the U.S. is a little bit different from Canada pension plan. First of all, it's more generous. So people actually live on Social Security when they retire in the U.S. and I don't think anybody can live on Canada's pension plan. The government pension plan anyway is too small. Secondly, they pay in more into the Social Security in the U.S. And the benefits are greater. But the third thing about it is that the Social Security is not fully funded, whereas the Canada pension plan is fully funded. So what that means is that the government's always having to kick in money. Now, they haven't got to the point where it's been a big bite, but with baby boomers, the oldest baby boomer reaching 72 this year, it's going to start to bite. So one of the changes they made already is they've changed the retirement age from 65 to 66 years and 6 months or something like that. I forget exactly what the number is. I met a guy recently that was complaining to me about that. So he says, I can't retire because they can adjust the retirement date, but it could get very expensive. And then, of course, Medicare and Medicaid is the healthcare costs in the U.S. are much higher than Canada. So as people get older, Social Security problems are going to be a problem, and also healthcare is going to be a big problem as well. And with less government revenues because of the tax cuts, it could be building up to a crisis.
Hilliard, what kind of pressure do you see on the Canadian real estate market with these new mortgage stress tests, and pretty well a given that the Bank of Canada is going to raise rates?
Well, so there are quite a few impacts. I think the single-family homes, you can see it in Vancouver and Toronto and Edmonton and Calgary, especially the more expensive ones. It's become a very, very soft market in fact, in some parts of Toronto, prices are down more than 20%, and that's on the March numbers. The April numbers will be worse because April last year was the peak of the Toronto market. And in the very expensive homes in West Van and North Van, the prices people haven't cut their prices much yet, but there's hundreds and hundreds of expensive homes for sale, and as there is in Calgary as well. So eventually somebody's going to be forced to sell, and there just won't be the buyers because of the stress tests for those more expensive homes. Now, foreign buyers have been picking up the slack, but they seem to have evaporated more recently. So whether that's the crackdown on the stress test, it's probably unlikely to affect the foreign buyers as much as it affects the local buyers. But there are some other initiatives with the governments of China and Canada cooperating. There's even a new initiative that says that if the Chinese government can prove that the money was somehow illegitimate, the Canadian government will cooperate in seizing the home and give the proceeds back to the Chinese lender or the government. So that's getting pretty serious. So, but getting back to the stress test, there's been a huge increase in the alternative lending market, because now you can't get CMHC without qualifying. You used to be able to qualify with no income, no job, but now you have to show, and that's been going on for a couple of years now. The number of insured mortgages being issued is plummeted. And then with the new stress test brought in January, now almost all of the banks are showing a huge drop in what are called conventional mortgages, where you need a 20% down payment because of the new requirement to qualify. The only bank that's showing a small increase is the Royal Bank of Canada, and nobody knows why. The Royal is fighting the trend, but we'll find out, I'm sure, very soon. So I think what's happening is people are going to the alternative lenders and trying to get the financing that way, but they'll find that that's difficult, because unlike the banks, the alternative lenders have to find a source of funds before they can make the loan. The banks can basically create money out of thin air just by creating a new mortgage, but the alternative lenders, it doesn't work that way for them. So, and of course the other thing is, if prices are flat or dropping a little bit. Now, it doesn't guarantee that if prices are flat or dropping that people will automatically stop buying. We're seeing that in Edmonton and Calgary. There's still a lot of bargain hunters looking, and the price drops 5% or something, and they show up. So, but eventually, if the price drops another 5%, they'll get discouraged and gradually drift away. So, or they just run out of ability to borrow. But the big thing we haven't talked about yet is the rising interest rates. So, the benchmark for a lot of this is the U.S. Treasury 10-year note, it's called, and it's just broken through that 3% level and going higher. So it's hard to imagine mortgages being a whole lot less than 4 or 5% when you can get totally safe return on the U.S. government debt at 3% for over 10 years. So the Canadian 5-year rate is over 2.2% now, and so even the 1-year rate in the U.S. and Canada is close to, in the U.S. it's over 2%, and in Canada it's close to 2%. So all of these mean that those lovely 2.5, 3% mortgages that were floating around for so many years are basically gone now. And I did talk to a commercial real estate investor recently, and he said they can still source CMHC financing at under 3%, but I can't imagine that lasting much longer with the rates going up the way they are.
Hilliard, we're getting pleasant noises from Ottawa saying the NAFTA talks now seem to be going well. They've solved a lot of their problems surrounding the auto trade. Is that really important for the Canadian economy? I think it's crucial. I think the lack of investment in new auto plants is really hurting Canada because, of course, the advance as well. The advent of electric cars with Tesla, but also all of the car manufacturers now are talking about coming out with an electric model. I think Chev has one. They've had it for a while. But the BMW and Volkswagen and all those. And if Canada doesn't get an improved NAFTA, Canada will get left behind entirely on those new plants. Now, unfortunately, the new plants tend to be more automated than the older plants, so the number of jobs is less than it would be. But there's other spin-offs when you get a plant located here, and of course, the Ontario government will have to kick in a whole bunch of tax concessions, and the federal government will probably have to kick in a whole bunch of concessions. But it certainly has put a damper on investment in Canada, just the uncertainty of NAFTA. So if that were removed, that uncertainty were removed, then that'll help quite a bit. And so it's pretty important, I think, that they get that resolved. And there seems to be a pattern with the Trump administration in the U.S. where they talk really tough, and then quietly they kind of agree to terms that are not nearly that tough. Recent example of that was the new agreement with South Korea, which basically they talked very tough and they got really nothing. Because South Korea gave up too little concessions, which I won't even get into, but they were pretty minor. So, and Trump was demanding that, all these concessions from South Korea in order to redo the agreement.
So I guess for his base, he gets what he needs in terms of just talking tough, and the details can follow afterwards. And we can hope that for Canada and Mexico that people won't notice, that we might even get improved terms of trade. Who knows?
Hilliard, thank you so much for chatting with us.
Nice to talk to you again.
My guest has been Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, MacBethGroup.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Doug Casey, Hilliard MacBeth, and thank you for listening. If you have any questions for the show, you can email us at info@howstreet.com. Plus, a reminder, at the end of the show, we'll have company showcase updates from American Manganese CEO and President Larry Reaugh and Vatic Ventures Executive Director Nasim Tyab. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh. He's the CEO and President of American Manganese. Welcome back to the show, Larry.
Well, thanks, Jim. It's always a pleasure to be on the show.
You had a news release earlier this week. Can you tell us about it?
Well, it was a news release updating the work on the IPs, the intellectual properties that we're planning on, that we will be filing patents on here very soon. And I just want to explain that we're looking at potential of 3 IPs and a pilot plant this year. And I would like to say that the work has started on all of those, and looks like it's pretty much completed on the 1 IP here. And what it does is that during the patenting process and the bench scale work that we did last year, we recognized that there were certain things that could be done in the process that would streamline it, not just streamline it, but potentially reduce the size of the whole plant. And that's very important, and we had to do some work to prove that we could actually do that before really starting to build out the pilot plant. And that has, I just want to assure everybody that that has started, and this is all very good for the company. We could end up with, 2 to 3 patents on this, or 2 to 4 patents on this process, and we want to get this done by the new patent applications in before June, and that'll become apparent at some point. But no, I couldn't be happier with the results to date. We're testing 2 types of material: the scraps out of the U.S. and the ground-up material out of Europe. I won't go any further and say where they come from because there's competition out there, and I don't want anybody muddying the waters. And we're getting good results from both. Certainly the ground-up material probably will not. Once you utilize that, it probably will not get to the 100%, but it'll be close. And because there's a lot of impurities with the ground-up material. But as you can see, we've dealt with the electrolyte, and that was important, and we have a process now that deals with electrolyte right off the beginning. So everything's progressing well, Jim. And while we're talking about that, everybody's concerned about the market. I mean, everything we put out is good, and it can be backed up. There's nothing in there that's gilding the lily or anything. In reality, we're getting the results that we expected to get. And we're starting to see a little heavier volume in the stock, and I think that some of the stragglers on exercising their 5-cent warrant are probably doing that right now. So that would be some of that. And again, that puts some money in the Treasury, but we don't like to see it happen at this late date in the warrant exercise. So I'd like to remind everybody, when you see good volume and you got good profits, that's the time you should exercise your warrants, not wait until the end days, because you never know what's going to happen in the market. And the market right now is saying, well, we're still sitting on the fence watching everything. I mean, we're not the only stock suffering. We're not suffering as much as some, and we're suffering a little more than others. But the reality is that there's just not a lot of buying in the market at this time. So all I can say is, for any new guys coming in, it's a good buying opportunity. And I had mentioned that we were getting a lot of interest out of Asia. That continues to accelerate. And, I think the Asians are, again, about 100 steps in front of the Western and North American markets when it comes to recognizing a potential. And so, who knows? I'm not going to predict that a deal will be done. I wouldn't like to see a deal done until we've got our patents issued, but who knows? It's not just China, and it's Japan and South Korea and Indonesia and India that keep emailing me wanting to get into discussions. And but I'm getting, for every one I get in North America, I get about 8 or 9 in offshore. So that's something for everybody to consider when they talk about doing a deal with Tesla or something like that. They're not prepared to do a deal. They're waiting for the world to catch up with them, and it will. But they're not prepared to step out of the box like the Asians are.
Larry, for new listeners, can you maybe explain what the whole game plan is for American Manganese and what you do?
American Manganese is a critical metal company that developed a process for taking very low grades of manganese at Artillery Peak, Arizona. And by the way, that is now becoming front and center. I met with a lot of the labs that come under the Defense Department and the DOE when I was in the conference at Las Vegas. And there's a lot of interest in manganese. But we took that process and we took it right through to a pre-feasibility study. And it showed that we could actually, get the electrolytic manganese metal out at a comparable cost to China. And but unfortunately, the price just kept dropping and dropping and dropping. So that project ended up in the shelf. But it was reactivated when it was recognized that the chemistries would work for the cathode materials in a lithium-ion battery. And it was important that we developed that we could get the cathode materials back. We've got 100%, and of all of them. So that was very important before we went into other developments. If we couldn't get it, then you have to make money, Jim. You can't just be doing a good deeds. I mean, you have to have money to do good deeds. So we're very happy with that. The company is now focused entirely on their lithium-ion battery recycling, and we are traded on the Toronto Stock Exchange Venture under the symbol AMY. We're traded in the U.S. under the symbol AMY.ZF. We're traded in Frankfurt under the symbol 2AM. Our website is AmericanManganeseInc.com, where you can do all kinds of due diligence. And you can contact me at LREAUGH@AMYMN.com, or you can phone me at 778-574-4444.
Larry, thanks for the update.
Okay, Jim.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. Our conversation took place on April 27th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Nasim Tyab. He's the Executive Director of Vatic Ventures. Welcome back to the show, Nasim.
Thank you, Jim.
Well, you're developing something that's pretty unique and something that probably hasn't happened in the world before, and that's going after potash in Thailand. Can you tell us what's new there?
Well, we have 2 potash exploration licenses in Thailand, and we've actually contracted a drilling company to basically start drilling our prospects, and that will commence on or about May 1st. So it'll be imminent. We'll drill 3 holes as part of the first phase campaign. What makes the drill targets compelling is that our properties are directly adjacent to a potash mine going into production rather. And so we're very pleased that we're starting activity.
Now, do you expect to find those giant coniferous or cavernous potash deposits they have, like in Saskatchewan, where you could build a city underground in one of them?
Well, basically, it will be underground mining. We expect similar to Saskatchewan, effectively the drill holes will tell the story.
For people who wanted to get more information, where can they go?
VaticVentures.com.
Where is your company traded and under what symbols?
On the TSX Venture.
And so far, what have people been telling you when they hear about you developing a project like this in Thailand?
Well, I guess the common perception is that most of the potash comes out of Saskatchewan as well as in Russia. But a little known fact is that Thailand hosts what are arguably the 3rd largest potash deposits in the world, and it's directly adjacent to the fastest growing market. And this allows for a $60 per ton transportation advantage.
Nasim, again, thank you very much for being on the show.
My pleasure, Jim.
My guest has been Nasim Tyab, Executive Director of Vatic Ventures. I'm Jim Goddard. We were speaking on April 25th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.